So we've got the last panel of the day, and we're here to talk about Avalanche, and it's a big day for Avalanche because it just announced this morning, actually last night US time, the closing of the Avalanche Treasury Company, which is a $670 million DAT, of which Bart Smith is the CEO. Bart, congratulations. Congratulations to you as well, Goon. Quick disclosure, we're investors. We're also, both Goon and I are on the advisory board of this DAT, but you really pulled this off in the twilight of the DAT mania. I know that it's been very, very difficult as of late for a lot of these DATs to get off the ground. Tell us what that was like and how you pulled together $670 million.
Well, it was a good story, right? And so I think that as we went out and went to investors, a thing that I found, very encouraging, even as you say, it was kind of in the waning days of that. The traditional investors really were receptive to the story. That when people think about blockchain and investing in blockchains, they generally think about them, for their network effects or maybe as an operating system. You hear oftentimes people talk about Microsoft is a comparable to some of these blockchains. And while I believe that that's true in the case of Avalanche, the way that we really position it is as enterprise software. Like, this is the software that people are going to implement into their companies to make them more efficient and make them run faster. And the same way that Oracle was kind of the baseline database that every company built on in the 80s and 90s, and then over time as those businesses built on top of it, steering away from that becomes very difficult, it becomes very sticky. And so we view that this opportunity with Avalanche on the business side as business software, and this is the opportunity that people want to invest in, and institutional investors were very receptive to that message.
So for a lot of those investors you were pitching, they're kind of exhausted with all the DATs. They're like, okay, yeah, I've heard a cajillion of these. What do you feel like was the kernel that really shone through to them?
Well, I think people understood that there's, the same way that an ETF is not good or bad, it is just a wrapper, that a digital asset treasury is just a wrapper. And whether it's good or bad is, what you put in it and how you manage it. We went a little bit of a different route. We didn't take an existing operating company and then just try to get it like a pipe and put it in there. We went to the SPAC route, so we're building a company from scratch. We're called the Avalanche Treasury Company. We don't have some other kind of, the existing business that was probably failed that has nothing to do with what we're focused on. You look at the name of the company, it just says it out there. And so the idea that this was a long-term, permanent capital vehicle that was going to be able to take that capital and invest it into the Avalanche ecosystem. I think the thing that resonated the most, though, Haseeb, was that every other industry was allowed to go to the capital markets and raise money this way, right? Software, internet, telecom. They built a company. They issued debt. They issued convertible bonds. They issued equities. They met investors where they wanted to be, met. And then you take that capital, you invest in this enterprise, and if the enterprise does well, the bond holders and the equity holders do well. For a variety of reasons that are very well documented at crypto conferences, this particular industry was not allowed to benefit from that. And so This is really a rectifying, of the kind of the Gary Gensler era, construct of not being able to go to the public markets. And I think when you put it in those terms, investors, thought that this is something that they'd want to take a look at.
So that makes you now the Michael Saylor of Avalanche. Do you feel up to the task?
I do. I think, I spent the last 20 years in traditional finance in a variety of different roles. I was offered the opportunity to do 2 or 3 of these other ones. I chose Avalanche because I felt like it was, the best opportunity out there. In the previous round, the last raise they did, the previous firm I was at, we were one of the largest investors in Avalanche alongside Dragonfly. And so, when I was approached about it, I said that this is something for this next phase. If you really believe that regulation and clarity is going to allow people to implement blockchain technology, there's no other blockchain that I'd want to work with and support than this one.
So Goon, this is a big step of validation for what you ultimately built all those years ago when you started building Avalanche.
That's huge.
And when you started, so if you rewind the clock back, like what, it was 7 years ago when I actually invested in the very first round when you were pitching Avalanche. And at that time, You were still a professor at Cornell.
I was.
Crypto was still a little baby, and what we were doing was all, we were sort of weirdos working on white papers. And what has it been like for you to personally have gone on that journey from kind of called bad boy professor to now becoming the steward of a top 20 protocol?
So it's been up and down. We've lived through a crazy, crazy, crazy journey altogether. I think a lot of the audience has as well. It started out as a technological idea. It started out as mostly a geeky project, and it started out with this very cool insight that we could achieve consensus super, super fast, and also a belief that the world could not be accommodated on a single chain, that we had to build multi-chain systems, that we had to build bespoke chains for different use cases. So that's how it got started. And I remember trying to motivate my student and co-founder Kevin Seknicki. He was trading coins, and I was like, "Come, let's work. Like, you should be working on the software." And I was telling him it could be worth $1 billion. And he makes fun of me today. It's like much, much, much bigger than that. And it's been a crazy journey all throughout. I think we've all lived through the regulatory attacks. We lived through the technical gobbledygook phase of blockchains. We lived through selfie phase of blockchains. We lived through political proximity phase of blockchains. But now we're at the capital formation stage, and now you're seeing that take place with the kinds of high quality efforts that you're seeing from the Avalanche Treasury Company and others. And now I think it's going to be show me the money, show me the actual deployments phase of blockchains, and I can't be more excited about what's to come.
Okay, so speaking of show me the deployment, a lot of what we've seen over the last year is more and more companies and enterprises jumping into space, building their own blockchain. Some of the largest fintechs in the world are now saying, "Hey, shit, I'm late. I need to figure out a solution here." In the early days, the story of Avalanche, as I remember the two of us talking about it, was mostly about technology. And today, what you can see is that the market is very, very clear. We're past talking about technology. We're here to talk about use cases. We're here to talk about adoption.
Yeah.
So talk to me about what you guys are doing on the adoption side, particularly around enterprises and working with some of these big companies on Avalanche.
We're at the forefront of institutional adoption. I think one of the critical decisions I made, it's a small decision, but it's been instrumental to our success, was to move the company to New York. It's the most scrutinized piece of real estate, the most regulated piece of real estate, but it's also the one that's closest to real assets. As a result of this, we've been in close contact, even through the depths of the bear market, with institutions that have real-world assets that want to deploy them, with people who want to build innovative applications that are transparent, auditable, and open to the public. And so those are all blockchain use cases where people want to deploy their own chains. So if I were to go into the full details of everything that we're doing, we would be here for hours. Well, I'll give you a couple of vignettes. Very recently, Toyota announced that they'll be building multiple L1s on Avalanche to track the entire life cycle of their vehicles. So just from the point of purchase for retail, the way you get in line to buy a Toyota vehicle will be an NFT on a particular L1. Tracking of vehicle upkeep, etc., will be on separate chains. And so these are all things that you can't do on a single chain system. So a single chain system like Ethereum and Solana would fill up if they were to handle all of the world's transactions. But with our architecture, they can do this. So Toyota is going to be using Avalanche for exactly this purpose. There are many other cases, many other examples. Top of mind are highly, highly demanding applications like games. So Off the Grid is a game I happen to play and get killed quite often. I'm sure there are some of you in the audience who, if you've played the game, you might have killed me in it. But Off the Grid is a fantastic first-person shooter game, and every time you kill someone and steal their arm or steal their leg or steal their armor or guns, that's an NFT transaction, and you don't even get to notice that you're using Avalanche. It's that blitzingly fast. And then, of course, there is the institutional work that's happening because we're on Wall Street with consortia to digitize their real-world assets, to build walled gardens for them where appropriate, and to open up trading to all, and to build open systems. I remember when I was a grad student and I tried to get access to NASDAQ data, and it cost $150,000 per year to get a seat at the table. Now it's all open. Any one of you can script these systems. Any one of you can participate on a first level basis, along with ginormous financial giants, JP Morgans, etc. of the world. And we're very, very proud of what we're building.
So you talk to a lot of these very large institutions that are trying to figure out, hey, what's my blockchain strategy? And when you're talking to these institutions, what do you see in terms of how the vibe has shifted over the last year, 2 years?
So the vibe, as I think the audience, well, this audience might not be aware of what has happened in the United States as much. So we went from the initial phases when we started, like 6 years ago. I would have to explain to people what a private key is, how a blockchain actually works, what a consensus protocol is, and so forth. I would say about right before the FTX crash, that's when everybody knew. Like when we would go in and they'd be like, oh, we understand how the stuff works. We are ready. We're itching to go. FTX crash set us back, the entire space back a couple of years. And then the regulatory uncertainty had everybody sitting on the sidelines. They understood. They knew it was inescapable. But it was a career risk for people. Now, it's just just call after call after call of people with very interesting use cases. And essentially, I think the insight is simple. Assets want to be digital. And trading platforms want to be global. And the only way to do this with today's technology, with the best of today's technology, is through blockchains, high-performance blockchains, with bespoke blockchains like the ones we offer on Avalanche. So we've got a lot of inbound calls coming.
That makes sense. And so Bart, given that you're kind of bringing the Wall Street crowd more closer afield into what's happening in Avalanche, what besides just capital accumulation do you feel like is in the scope of possibility for a DAT like Avalanche Treasury Company?
Yeah, and what you're trying to provide is like a holistic exposure to the growth opportunity around the Avalanche chain. And what you see in a lot of other kind of opportunities is that not all of that benefit accrues solely down to the token itself. There are different builders on top of that have enterprises that might have a different token that's that's on an L1. And so being able to, beyond staking and liquid staking, but this treasury company will have the ability to add capital back into, in the form of TVL, to new protocols that are being built on top of those L1s. We'll be able to do staking or validation, so we'll be running nodes so that these new L1s that are building on that, they have someone that they can work with. And there's going to be our ability to kind of directly invest into some of those companies and take equity positions. And this will probably be a very small sleeve of the total kind of the total treasury, but we believe over time that small sleeve might be able to provide outsized returns that will really kind of represent all of the business activity that's happening in the ecosystem and not just accruing down to the token.
So let's also take the counterpoint, right? So the classic monolithic blockchain is Solana. Gigantic boxes, big servers, like vertical scaling. And what Solana might say in response to something like Avalanche is like, okay, well, does it really make sense for every chain or every company to have its own chain? Shouldn't there be one big mega chain that we all work on together? Aren't you just causing fragmentation? What do you say in response to somebody with that challenge?
So no, first of all, it doesn't make sense from a technological perspective. The moment you jam pack everything onto the same chain, then you start creating bottlenecks and you start driving fees up. Congestion on your application should not drive the cost of access for my users. And so that false sharing is what causes Ethereum fees to spike to $500. That's what causes Solana to stop working every now and then because of congestion on one app affecting the entirety of the chain. So there is that alone. There is the second aspect of this, which is legal and geopolitical concerns. If you look at a country like Korea or Singapore or wherever else, pick your EU, each and every one of these jurisdictions has its own rules, and for good reason. And so they need bespoke chains that actually enforce their own validation rules that are not going to be the same as each other's. And there are very good reasons to want to have your data housed on-prem, on-site, in country. There are very good reasons to have data access restrictions or to locate all your validators in certain areas. So as a result, you need different structures for different use cases. So that's to start with. And I think if you think about what's happening on top of Avalanche as a result, we're seeing we're seeing wholesale countries explore how an L1 for their use case might look like. We're seeing consortia come in and say, look, we have unique requirements ourselves. We're seeing IoT examples, for example, where people want to have, look, I have very, very low energy requirements, very, very low cost requirements, and to accommodate these, I need something different than the default. One size does not fit all. So if you believe that, then the play is Avalanche.
One of the things I'd like to add there that was important in the conversations that I had with people over the course of the last month or so is that corporations and businesses do not want to take their customers' private information and put it on a public blockchain, right? They do care about KYC and AML, so they want to build a stack where they can customize their ability to have their customers' information on there to KYC people, where they can own the entire economic stack from top to bottom and to customize the chain to meet their individual kind of business needs. And I think that was something that resonated over and over to me in those conversations that you just can't get, in any of the comparable chains out there.
Okay, so we're definitely seeing this accelerating trend of more and more companies coming on chain, more and more companies launching their own chains. What's the end game? Are we literally going to see every company have its own blockchain? Or do you expect that it's going to be large companies that have their own chains? What do you imagine, let's say, 5-10 years in the future?
So that's the second half of the answer to your previous question as well. So what does this look like in the end? Is it going to be completely fragmented? Does having all these chains means that we break up what we have, the beautiful single chain abstraction? If you do it right, no. If you do it wrong, it can. So that's a legitimate concern. And what we did from the get-go in Avalanche is make sure that these L1s are interoperable. It's trivial to be able to send a message from one chain to another. When our chains need to communicate, we have all of the facilities to make that happen. The liquidity hubs will take place. At the moment, we're seeing the C chain emerge as the big global liquidity hub. Many people are launching their own chains, but their tokens are traded on the C chain, globally accessible to all, very, very easy to access with any Avalanche wallet. So what we're going to find, I think, is the highly valuable assets will be traded, located, borrowed against, etc., subject to put-in lending protocols and so forth, on big liquidity hubs like the Avalanche C chain. And we will see a whole bunch of L1s carry out the day-to-day transactions and shed offload from the main liquidity hubs.
So the idea is that even if there are many different companies that have their own L1s, it's going to feel seamless from a user perspective.
Yes, it's many chains working as one. It's an ensemble of chains working in parallel and communicating as necessary. And to the user, it should be seamless.
Fair enough. So, Gun, let me maybe zoom in a little bit on you personally. So you've been the spiritual leader, the kind of heart and soul of Avalanche, now for 7 years. Crypto has changed so much since then. I'm sure your team has evolved. What gives you the energy to keep doing this? Because crypto is relentless. You've been through a lot of shit over the last 7 years of building this thing.
We all have.
What fundamentally motivates you?
So I wake up every morning just driven to show the world how it's done. And I always was a competitive person. I always was like, yeah, let me see what the game is. How do you guys play this game? What are the rules? Let me show you how we can do it better. And I keep hearing from all these other chains, like, oh, this is a chain for banking, except I can't find a single bank where that chain is used. Or I keep hearing from people, it's like, oh, this is like, it's got all the technical gobbledygook. And I look into it, and I worked as a professor at Cornell for 19 years. I understand the technical gobbledygook very, very well, and I'm not afraid of Greek letters. I've written papers where I ran out of Greek letters and had to use additional alphabets. So I look at these things and I see a whole bunch of hollow talk. So what gets me out of the bed is the desire to show the world how it can be done. And I think one of the best examples was off the grid. Like, we showed the world how on-chain gaming can be. It doesn't need to be a Ponzi. Web3 gaming need not suck. It doesn't need to be boring. It doesn't need to be bad. It doesn't need to have some financial Ponzi-esque elements in it. It can be a great game with a blockchain behind it. And I plan to do the same thing in every other aspect, in every other financial rail. So that's what gets me going.
So if I can summarize, it's the distinct pleasure of destroying your enemies that gets you out of bed.
But they're also my friends.
Oh, your friends too. Okay, okay.
No, it's showing the world how things look, how much better things.
Okay, fair enough, fair enough. When will you say, you know what, I've done it? Avalanche is built, I did the thing, it's time to ride off in the sunset?
So I personally think that it's probably never. So I come from a long line of people who died working. So, but I do have some gauges for the audience to use. I think we are, as a space, still in the capital formation phase of the game, and we will know that that phase is over when the number one token is a stablecoin, not BTC. And
Why do you say that?
because that's when there is sufficient capital on chains to overpower and exceed the amount of capital kept on native tokens. So that's, I think, our first sign of maybe the first phase is over. Until that point, I think we're in the early stages. For me personally, I want to see Avalanche in the number one position, and I can't wait to see the days when when BTC miner rewards, for example, go down and the security budget is threatened and so on. So I think there's a lot of interesting things to come in the future.
Do you want Avalanche to overtake Bitcoin?
Why not?
What year do you think that happens?
About 12 years from now is a good mark.
12 years from
12
now.
years from now, we're going to see where the Bitcoin price is and,
Bold price prediction.
what the security budget is.
We got a nice little applause break from the audience. Okay, you know what? I'll let that stand, and hopefully people can dive into that later. Let me ask you then. We're running up on time pretty soon, but what do we have to look forward to within the Avalanche ecosystem? You're not only the leader of Avalanche, you're also the technical mind behind a lot of what goes on in the ecosystem. What do we look forward to in the Avalanche ecosystem aside from this enterprise build-out?
Okay, well, so on the technical side, if I can get wonky for a second. So I've been personally working on on how to make nodes go much faster. Almost everybody in the space is using very, very old databases and very, very decrepit execution technologies. So we're doing two big things that are coming up soon. We have a graphite release that's going to introduce some of it, then there's going to be another release after that. But the two things we're introducing at the node level is a new database called Firewood that is built for cryptocurrency use cases, that is optimized for the kinds of workloads that we see in crypto, as opposed to the kinds of workloads that traditional DBMS systems used to use. That's one. We're speeding things up by taking advantage of micro-parallelism. Avalanche already is quite fast because it takes advantage of macro-parallelism, but we're also introducing some additional asynchronous execution techniques to speed our engines up. In addition to that, I've been working on how to improve the user experience. I think those of you, how many of you here have used DeFi? Let's see. See, it's an insanely low number. That's, it's got to be every hand up, right? How many people have used banking services? I'm sure all of you have a bank, right? So that number has to match. Those two numbers have to match. And DeFi is exceedingly difficult to use. So we have a wallet that whose vision is to serve as a command center so that you never have to leave the wallet. You just go in there and you carry out all DeFi activities from within a single console. So I'm working personally on that front. And of course, on the BD side, we're working relentlessly on all of these fronts with financial institutions, with non-financial institutions, to bring real-world assets on-chain.
Okay, last question as we're closing this out. You and I have talked a lot about AI over the years, and I know it's been a deep interest of yours as well as a subject of much of your research before coming into Avalanche. How do you think AI is going to affect our experience of crypto in, let's say, 5 to 10 years?
So I actually gave a talk on this about 3 years ago, before anybody else did, and I introduced something called coin-operated agents. And we don't have enough time to go into all the details, but one thing that we are also working on that I should have mentioned is a chain where the native language parsed by the chain is actual native human languages. So there is essentially a chain where the validators all have LLMs inside, and you interact with the chain in your own native language. So you can say something like, I would like to borrow against my holdings of BTC so much stable coins, etc. Or I would like to define a lending service where token A is traded against token B. And you specify this in English. Or, with a much simpler example, I would like to give to your, I would like to donate $5,000 towards your movie making effort, assuming you can raise $5 million by October. Right? So, and you write this out in English, or you specify it in Tagalog, or whatever language makes sense for you, and the AI engine interprets this. So we were at the very forefront of this. We're waiting for the LLM technology to mature a little bit, because if you deploy this right now, people are going to lose a lot of their capital. But we're very excited about this. I think this is one of the best uses of AI as applied to blockchains. There's easier use cases that we've seen. We've seen agents attached to the chain at an address. That's a simpler way to sort of approximate this idea, but I don't like that as much because it's not decentralized. You're still trusting other entities. So this is the non-trust requiring, the decentralized version of that vision. So I'm excited about this, and many other use cases of AI and blockchain. There are many others that we're going to see. We're going to see blockchains used to store provenance data, etc., and to verify the results produced by AI. So we'll see how this space pans out.
Very good. Well, the future is bright, but we are up on time. Thank you to these two gentlemen for a very excellent discussion.